Hi, Mike Richardson, owner of Alliance Home Mortgage. Just catching up with you on what's going on in the mortgage markets and how the markets closed today. The mortgage-backed securities market went was down 41 basis points. We we ended up closing below a strong level of support that had been sustaining the markets for the last multiple days. Actually, it was a 25-day moving average. I'll get into more of that here in a second because I want to show that to you on the bond page, and let's kind of talk about what drove the markets today. um, the mortgage-backed securities market continued their gradual move lower, which means interest rates are continuing to climb on a daily basis. Basically, since I would say Monday, we kind of started to see that turnaround, and it's continued throughout today. Today's movements were based on the reports with the CPI index numbers. That's the consumer price index numbers coming out. What the consumer price index tells us is whether inflation is increasing or decreasing, and these numbers indicated that inflation was increasing. Inflation goes against mortgage-backed securities in the bond markets. When there's a rise in inflation, the mortgage interest rates are going to automatically increase. The mortgage-backed securities prices are going to decrease, and it's because of that inflation and the return on investors' investments in a fixed rate of return like a mortgage-backed security with inflation on the rise is lost. So investment dollars don't go into fixed rate of returns when we've got an inflation factor in play, and that was indicated today with the consumer price index showing that inflation was on the rise. The other thing driving the stock markets today was the news that the global central banks and the Feds will lend European bank dollars in an effort to ease the banking system over there and all of the problems they're having with the banking system. And that's what really drove the stock market today. Let's go ahead and hop into the bond page, and I'll show you what I'm talking about with the 25-day moving average. Right here we've got our support levels here. You've got support 1 and support 2, and then our resistance levels right here, resistance 1 and resistance 2. We've been riding that support level, as you can see, for 1, 2, 3, 4, 5, 6 days. It was pretty much supporting the 25-day moving average was supporting the bond market, and today we actually closed below that. So that's not a good sign at all. Hopefully tomorrow we can close above that, so we can reestablish that as a support level, because at this point it's not a support level anymore. We're already below this, and now our next support level is at the price of, see if I can get it to come up here, 100.50 is our next level of support. So hopefully we don't go that far. We'll only know tomorrow, but interest rates over the last few days have started to increase from the end of last week. You can see, let's see, Thursday, Friday was not a strong day. There was a lot of price movement, but it was a positive day, and it was a high over the last few weeks. But then we had a trend reversal come Monday, and it's been trending that way ever since, with a big drop today. You can see where our open price was right here, and at 101.4375, our low for the day. It's not popping up for me. Here it is, 100.75, and then our close here, which ended at 101 even. So not a good day in the mortgage-backed securities market. Our recommendations are to lock at this time. We'll talk to you soon. Thanks a lot.